What's up, everybody? Stacking Surfer here. I've got an awesome video for you guys today. And before I introduce our guest, just want to remind you guys that we have a lot of videos that are coming out, and so that you don't miss them, please hit the subscribe, the bell icon, and also a thumbs up if you're enjoying the video. That always helps. But today we're going to be talking about gold. We're also going to be talking about silver. We'll be talking about, is there a capital rotation that's starting to happen from Bitcoin into gold, and when that might happen. And we're also going to be talking about a way to be able to continue to invest and to be able to hold assets that can allow you to have a balance in your accounts that stay the same while you're spending. So stick around until the end, and we're going to talk about that as well. So I'll bring our guest up here, Kevin Wadsworth. He is known on X as at Northstar Charts. You can also find him on the website of northstarbadcharts.com. Kevin, how are you today?
I'm great, man. How are you?
I'm doing well. These are always fun. I may not look perfect because it's always an early morning for me when we're talking to someone over in the UK. But it gets me going in the morning. And this is one of my favorite subjects, is not just gold and silver, but it's talking about rotations. And one of the reasons for that is when there's rotations, there's opportunity. It means that there's kind of a shift of going on. There's a little bit more excitement for me. So that's always kind of a fun thing for me versus just, being in the middle of, the last couple of years. If I go back 3 or 4 years with gold, it was, when's it going to start to move? When's it going to start to really take off? And we had cryptos doing, pretty well at that time too. So anyway, I love the charts you guys put out. There's always really good information about it. I love that you also look at other markets, meaning stocks. You look at the crypto market as well and how it relates to precious metals. I think it gives us a really good rounded idea of when is the best time to be in the different asset classes and why. But tell me, what's going on? What's new?
What's new? A lot is new, isn't it? I think the markets have been very, very volatile over the last few weeks and months, not least because of the political side of things that's going on at the moment. But that aside, it doesn't actually change the big picture in terms of what's been going on. As you said a moment ago, gold has had a big move. It broke out in the $2,000 area, moved very strongly, well beyond $3,000, and it's extended to the sort of $3,500 area, as everybody knows. In the process of doing that, it's become very stretched historically from its moving averages. The measured move targets have been reached. The Fibonacci extension levels have just about been reached, near enough. So I would view this sort of price area where we are now, between here and, let's say, 3,800, as a sort of a greedy zone. It's not an entry point for gold. It certainly is not an entry point for traders. It's a profit-taking area for those who were able to spot the breakout when it was down near $2,000 or even a little bit above $2,000. So gold has done really well, and silver has everybody banging their heads against the brick wall at the moment, I think, because silver has done not a great deal compared to gold, and a lot of people, of course, looking at that area around $50 as being a target. The thing you need to realize is that silver is a recovery metal, and silver will really outperform after the stock markets have had a severe well, not even a severe pullback, but have fallen 30, 40, 50%. When you look at past stock market bear markets, it's after they put in the bear market lows that silver rockets to the moon effectively and massively outperforms gold and pretty much everything else. So it's all about timing, and cryptocurrencies are doing well at the moment. Bitcoin is doing pretty well, and of course is getting back close to its all-time highs there. And this is a function of the stock markets having not broken down in a severe fashion. So a capital rotation is underway at the moment. It's taking place. For example, gold has broken out into a bull market versus all of the 11 S&P sectors. Gold is in a bull market versus PPI, CPI, money supply, the US dollar index, the Russell, the Dow, the Wilshire, NASDAQ, and the S&P. So gold is in a bull market versus all of those things, and those are elements of what define a capital rotation event. But because gold has done all of the legwork so far, it's kind of skewed the charts. It's made it look as though a capital rotation event has already occurred with all of those boxes being ticked. but that event is never, you can't look back and say the capital rotation event has actually occurred until the stock market is broken, because without the stock market breaking, you're not going to have that source of capital to power commodities and silver and gold and precious metals and that whole complex that is defined by a capital rotation event. So as it stands at the moment, we are on the cusp of confirming a capital rotation event, but without stock markets breaking, that ain't going to happen. So gold is stretched, likely to cool off either through time or through price, or more likely a combination of both. But either way, I think it would be asking a lot to expect gold to go up a lot from here. Silver has a barrier at $35, and at any point, for whatever reason, if silver punches through that, then you're going to get a sharp rise towards that $50 target. So whilst the stock markets haven't gone into melt-up mode, and whilst they haven't broken down, the precious metals are in a sort of indecision point here. They're trying to break out, they're not breaking down. But if it becomes very clear, or when it becomes very clear that the stock market is melting back up towards those previous highs and above, or if the stock market breaks support, either of those scenarios, I think will trigger a more significant and prolonged sell-off, if you like, in the precious metals to reset the sentiment. And then, of course, at the same time, the gold-silver ratio is likely to move even higher, because in a pullback, of course, gold holds its value better, silver tends to fall more. So it's quite probable, very likely, that gold-silver ratio goes even higher than the sort of 103 area where it is at the moment, which, as it is historically high. So what that's going to do is set us up for a massive opportunity when the capital rotation event can be confirmed and the stock market truly breaks down, because that gives silver the room and the space that it needs on that ratio to massively outperform gold in a way that most investors will probably only see once in their investing career.
So to kind of break that down a little bit, Kevin, I'm going to throw a couple things out there. Part of the concept you just talked about is, where does money flow? Where does money go? And I don't know if everybody realizes that, but large amounts of money move from different asset classes at different times based on trends. And I like to call them waves, stacking surfers. So I see them as different waves that are kind of coming into play. We've already felt a good move into the beginning of a gold bull market. And where we've seen the prices go from, let's say, $1,800 up to $3,500 US. What we haven't seen, as you're saying, is a complete confirmation of a capital rotation where money is moving out of other asset classes like crypto and stock markets or equities into the gold market yet. And when that does happen, we should see a more significant move upwards over time as that continues to build with that pressure and with that money trying to find a place to go. Is that
yeah? But so far, the illusion, I don't call it an illusion of capital rotation, but the appearance of capital rotation has been powered purely by gold's strength. And for whatever reason, Chinese buying, banks buying, whatever it is that's behind the strength of gold, it's that gold strength without the breaking down of equity markets that has powered this event so far. So without the next stage, without the stock markets breaking, then we have to park the idea of the capital rotation event confirmation to one side and respect the fact that the stock markets are showing strength and that crypto is showing strength and that risk on may continue for several months. So, it's a question of how long the risk on phase can continue. My feeling is that later this year, some nasty economic numbers are going to start hitting. Reality is likely to start hitting. The yield curve inversion chart hints at that, well, very strongly hints at that, because of its association with recessions, and also the 10-year yield breaking out as it did a couple of years ago and moving to where it is now at 4.5% is very problematic when you've got debt to GDP of 130% or so. So, sort of under the hood, if you like, there are problems brewing that I think are very highly likely to make their presence felt later this year. So rather than a sort of a tariff tantrum or anything like that, it's more likely to be the harsh economic reality that brings equity markets down to earth. So that lies in the future, and until the stock market breaks that important support line, then the next stage of the capital rotation event, as I say, is on hold. And in the meantime, we can take opportunistic trades in cryptocurrencies and across equity markets as we see fit, but with very careful risk and money management because of what I've just mentioned.
I think that's important to look at. So what I'm hearing, if I'm restating this a little bit, Kevin, what I'm hearing is we've checked the boxes of the capital rotation, that we're seeing gold outperforming or starting to move against those 11 classes in the equities market. What we haven't seen, though, is we haven't seen either a blow off top or a massive move upward that often results in a pretty drastic crash or correction.
Yeah, just to pause you there, there are two sort of scenarios for the ending of a stock market bull market, and it's either that blow off top scenario, which you could argue we've already seen if you look at the S&P versus money supply or NASDAQ versus money supply. That does look somewhat like a blow off top, but on its own chart, S&P and NASDAQ, you could argue that that's not really what we've seen so far. So the scenario that we have at the moment goes two ways: a true blow off top where the whole thing goes vertical and everyone goes crazy for a few months, or we're in a complacency phase post peak where you get this bearish rising wedge on the stock markets, and you can see that on the S&P chart. So if that rolls over in the near future, then that is very clearly telling us that we were indeed in the complacency phase, and then this thing is going to crumble much quicker than, let's say, Q3, Q4 of this year.
Okay. And so right now, if someone has extra money and they maybe are not against putting money into the crypto market, they're not against putting money into the equities market, they like gold and silver, what are the things that they should be watching out for to help them make a decision on where to put that extra money right now? There may be a tendency to say, hey, let me go jump into Bitcoin, it's going to keep going up, and they may be buying at 100, I think we're around 103, 104, somewhere around there, 1,000. They may be looking to say, hey, I want to hurry and get into gold, it's been performing really well. What would be some thoughts there? And as always, guys, we can't give you financial advice. We can just give you guys kind of what we're doing and some ideas to be thinking about. It's always good to go talk to your financial planner and just get a second take on that. But what are some of the thoughts and ideas of places where people could be entering into the market right now that would be safer, or things to watch out for to potentially avoid buying at the top? But as you've already mentioned, we don't exactly know how it's all going to go. Charting is not a crystal ball, but it is kind of a roadmap or a guideline that shows us the possible outcomes that can happen. Yeah,
sure. And a very important point to be very clear about is your time frame, because there's a very big difference between wanting to enter and exit a market as a trader with a trade based on weekly time frame charts or daily time frame charts. There's a big difference between that and, of course, stacking and longer term investing. So let's make some simple factual statements. Gold has had a big run. It's doubled roughly from 1,800 to 3,500, even from the $2,000 breakout. So gold has had a huge move and it's stretched. Okay. Bitcoin isn't. Bitcoin has reset its moving averages. It's had a pullback and is now sort of moving up. This chart that you've got here for gold shows very clearly what I mean about gold being stretched. So classic cup and handle pattern. It's impossible to miss on the chart, and that breakout in the $2,000 area, depending on how greedy you are in measuring the depth of the cup section, a classical TA measured move would be the depth of that cup. Now, if you look at the left-hand side of the cup and the right-hand side of the cup, they are clearly at slightly different levels. Yes, if you put it on a candle chart, you'll see the wicks on the left-hand side that go up to the top pretty much. But on this chart, which is based on monthly closes, I think it's the monthly chart, you can clearly see there's a difference there. So depending on whether you are a bit greedy with a measurement or less greedy and use the blue arrow, you wind up with this sort of target box, which we have reached. So that target box should be viewed as a profit-taking area for anyone that entered when the pattern broke out. It is not a point to enter. Yes, it might go up, but even if it does go up, it wasn't an entry point. The entry point was way down, closer to $2,000, even 2,200, 2,300. You know, that's where your entry point was, down there. This is a profit-taking area for traders. If you're looking at the very big picture and you're observing the fact that we're in a precious metals bull market that has a very high probability of going much, much higher from here, then of course you can zoom out and just stack at whatever price points you want to. You probably won't care very much. The equal weighted S&P versus gold shows that rotation process that we were talking about. And if all the stocks in the S&P were given equal weighting and you plot them versus gold, this is the chart that you get. So it's less distorted by the Nvidias and Microsofts of this world, and you get a more even representative chart. So when the chart's going up, the stock market is winning, and when the chart's going down, gold is winning. And we've put on there a 12 and 36 month moving average and the Ichimoku cloud, which is that funny red and green cloud splodgy thing on there. And they both act as support levels. Bull markets occur above the 3-year moving average and above the Ichimoku cloud, and bear markets occur below it. And as you can see, we've rotated over and fallen into a bear market. This chart is probably a few weeks or several weeks old now, and we've moved even lower. So this chart has dropped even further now, somewhere sort of halfway between the 28 and the $5,000. I just put those numbers on there: 28,000, 2,800, 5,000, and 8 to 12,000 as a rough guide as to my calculations for where the price of gold is likely to be as this thing drops. And as I say, we've got about halfway between 2,800 and 5,000, so getting to $3,500 gold is about right. So those numbers still sort of line up and make sense. It just helps us with our roadmap. But you can see that rotation, and even though the S&P is kind of doing okay, when you look at the chart for the S&P, what you can't see is that you can't see that it's losing its momentum versus gold. And when something starts to break down versus gold, that's like diagnosing a patient who's going to get very, very ill, but you're diagnosing them in the early stages of the disease. You're able to spot that they've got this disease because you've carried out a blood test, and you know they've got the disease, and left untreated, they're probably going to die. Well, not die, but they'll be going to be very sick. So that's what we're diagnosing here with the S&P. We're using gold as a blood test for the S&P, and it's come back and told us that sorry, S&P, you're quite ill, and you're prone to something really quite nasty, putting you in a hospital bed for quite a long period of time.
That sounds good. And then Kevin, we had some other charts you were showing me earlier. It looks like it came off of this thing, but if you share again, I can probably share that if you want to hit those. Before we do that though, so when we're looking at this, Kevin, you brought up something very important, which is there's a difference between trading. So if people that are watching this are, say, you're wanting to buy gold or silver mining stocks, if you're in broader equities, if you're buying companies that are in the S&P 500 or other stocks, as well as if you have cryptos, these charts, I believe, are very important to be watching because they give you an indication of when we are getting closer to, buying periods or selling periods. Now it's up to you to make a decision on what you want to do with that. I sell coins on eBay as well, and I recently sold a gold coin for a little over $3,500. And I'm not looking to go and replace that today. That's, for me, it's kind of like a trade with physical. I'll be looking to move that into something else, but I see opportunities where, okay, this might be a good time to buy some of that. I often also have opportunities to buy gold and silver below spot, so I'm watching for some other entry points for that. A lot of channels out there keep saying we've already hit a bottom in gold. It's not going to go any lower. It's only going to go higher from here. And I think it's important to look at different perspectives and ideas there, so you guys get that understanding. And then, as always, if you're buying the physical, I always like to recommend dollar cost averaging, where you set yourself up on a plan over time, especially if you have a long time horizon of 5, 10, 15, 20 years from now of when you might sell it, or maybe you're holding it and passing it on to the next generation. So some of these movements are going to be more important to different people based on that time horizon. Now, what about silver? What are you seeing with silver right now?
Okay, I'll share my screen and we'll take a look at the silver chart. So hopefully you're getting the silver chart.
Yep, I've got it right here.
Screen. There we go. Good. So silver, like gold, has formed a cup pattern, which is completing as we speak. And just bear in mind that this cup is actually the handle on a cup and handle pattern that goes all the way back to 1979. So if I was to just let me just adjust the chart upwards and use TradingView here to put this cup on here so you can see what I'm talking about. So this is just one huge cup and handle pattern that goes all the way back, as I say, to sort of 1979 there. Just adjust that there.
That's the biggest one I've ever seen on a chart.
Yeah, you're not likely to see any cup and handles much bigger than that, except perhaps with the Nikkei. Actually, the Nikkei,
yeah,
I think that goes back to 1990. So even the Nikkei is not as enormous as this. So it emphasizes the importance of this, let's say $45, $50 sort of top on the pattern. So when we zoom in and look at the latest arc pattern that's formed here, we spotted this pattern when we had the COVID low, because we had all of these lining up on a perfect geometric arc, and hey presto, the COVID low stopped right on that arc. So back in 2020, we put this chart out there and suggested that eventually, over the coming few years, it was likely to guide us back towards the top right hand corner. Well, it's done that. It's guided us to the top right hand corner, but again, it depends how greedy you are, and this spike all the way up to $48 on a monthly closing basis is sort of the greedy part of it. So two choices here now. We either form some sort of little handle on this cup and then move up, or we complete and move up into this green zone here. And the clear barrier, as I mentioned before, is around sort of $35 or $34.50. And the support area is on the arc is somewhere around $31 or so. There's a horizontal support level at 28 as well. If we break below 31 or so, then there's some pretty strong support at 28. So what I would say, to try and, this might sound like a load of mumbo jumbo and babble to people listening to this, but I'll try and make it simple for you. Anything below $30 silver is going to be a bargain, okay? And I think any point in time where silver starts moving below $30 is going to be quite limited in terms of a few weeks or a few short months, because silver is a recovery metal. And what I want to show you is this chart that explains why silver hasn't done a great deal very recently. And it's because the bottom chart here is the S&P, and the top chart is silver versus gold. So the top chart, when it moves up, is silver massively outperforming gold. Every time you get an upward spike, it's silver outperforming gold. And look at the bottom, the S&P drops 50%, and after it's dropped, massive spike upwards, and silver outperforms gold by 150%. Same thing here, S&P drops by 25%, big spike up in silver afterwards. S&P drops 50%, big move up for silver versus gold. S&P drops over 50%, huge spike up, silver outperforms gold by 150%. You have to remember that gold is going up in these periods as well. So gold is doing great, but silver is doing twice as well. Same thing again in 2020. S&P dropped 37%. Silver very significantly outperforms gold for probably a year or so. So it's all about timing with precious metals. And just on that point, timing, this is the Bitcoin versus gold chart, and it tells you effectively whether you should be in. Well, and bear in mind, the Bitcoin tracks general equities pretty well. Bitcoin is a very good proxy for the Nasdaq, or at least a leveraged Nasdaq. So what we're really comparing here is gold versus risk-on, crypto, tech stocks, Nasdaq, all that kind of thing. Now, tech stocks and Bitcoin broke down versus gold. We've been bearish Bitcoin ever since it failed to break out above this resistance level, and particularly since it broke below the support level here, and we're back testing that support now. So again, a bit like the stock market, we've got two options here. Either the chart moves up and Bitcoin significantly outperforms gold in some sort of blow off crescendo to its bull market, or this is just a back test and it resumes downwards, in which case you need to turn bearish on Bitcoin very quickly. Because gold is stretched, it makes more sense to me at this point in time that Bitcoin and stock markets would outperform gold for a while. So I'm beginning to think that it's quite likely that this moves to the upside and breaks out. But you have to observe the evidence. And as soon as this chart crosses that red line, then we have some evidence that Bitcoin is entering a more energetic period of outperformance versus gold. And you can take advantage of that. There are so many ways these days of buying gold and silver and cryptocurrencies in online accounts, digitized, and even with having your precious metals in physical form and stored for you. I know some people are very touchy about that and they want to have the physical precious metals in their hand, and that's fine. But there's nothing wrong with doing a combination of both. You can have precious metals in your hand and buried in your house somewhere or whatever you want to do with it. And you can also have some of your precious metals in an online digital account. And many of these online digital accounts allow you to swap between precious metals and cryptocurrencies as well in a few seconds. So you see this ratio breaking out, you can switch quickly into Bitcoin, then you see it breaking down, you switch quickly into gold. And if you switch between gold and silver and cryptocurrencies and don't even have fiat at all, as soon as you get dollars, euros, whatever, convert it straight away into one of these. You can be spending it all the time, getting your groceries with it and spending it for, and your account is still going up. Don't forget, gold has gone up 50%, and Bitcoin's just gone up another sort of 10%. So spotting these moves, you can switch from one to the other and see your account go up 10, 15, 20% in the space of a week or two. And that way you can spend money that is effectively free. Or if you want to, you can increase your ounces as a stacker. What's more appealing than, okay, you put $10,000 into one of these accounts, you get $10,000 worth of gold, and then you switch it to Bitcoin, and then a few weeks later you can have more ounces of gold than you had before, and then you can switch it back to Bitcoin and own more Bitcoins than you had before, and you can keep switching between the two with no dollars involved, and as if by magic, your ounces of gold and your numbers of Bitcoins are going up and up and up. Great.
Yep. I think it's awesome. So last question I have for you, Kevin, before we tell people how they can find you again and the services that you guys provide. I'm hearing a lot of people talking about playing the gold to silver ratio. And, we started hearing that conversation around the 80 mark with the ratio, where people started saying, hey, it's better to start buying silver than gold. Once I started seeing it hit 90, we started hearing people talk about, hey, maybe I want to start to play the gold to silver ratio and take some gold and buy silver. Once it hit over 100, I heard more and more of that chatter. Do you have any thoughts or any ideas or, helping people understand that? Because one thing I can tell you is, especially if it's in physical form, you're going to have to deal with premiums, and you're not really seeing the gold to silver ratio at that number. When you go to, you're going to lose quite a bit on that number if you're switching it. You're usually selling and then having to buy the other metal, and you're going to lose a lot of premiums in between there. You may find someone willing to trade it, but what are your thoughts there?
Okay, I'll quickly share the chart, and that because a picture does paint 1,000 words, so I'll quickly take a second to share my screen, because it's important that people understand this. There we go. That's the screen sharing done. We'll just wait for the chart to pop up. So this is something that we have on our website for our members, and it's the gold silver ratio decision aid. Okay, my background is in aviation meteorology for the Royal Air Force in the UK, and I would work out a very complicated weather forecast for the pilots. And at the end of the day, all the military pilots want to know is, Kevin, can I go on this mission or can't I? Can I do this low-level bombing mission? And so I would take the complex upper air information and weather information and turn it into a decision aid. And it's called a tactical decision aid in military circles. where you take a complicated information and just provide a simple answer. So to answer your question, the gold-silver ratio, we went bullish on the gold-silver ratio when it broke out, and we're in what I've called the GSR recession spike zone. When a recession occurs, you're likely to see DXY moving up. You're likely to see the gold-silver ratio spiking, unemployment numbers going up, of course, and this will all happen after the 10-year minus the 2-year yield curve has uninverted, which has happened. So the GSR moving up isn't a surprise at all, and we would expect it to move up significantly further as the metals correct. So there is plenty of room for the GSR to move up further. So yes, when the GSR is high, you can see if you zoom right out that it tends not to stay high for very long. But something else that you notice when you zoom out is that over the decades, the GSR has been going up for a long time overall. So overall, gold is a better bet than silver. But there are periods where you get this huge drop, and that's when silver massively outperforms gold. And that's when the stock market has, as I say, plunged, reached its bear market bottom, and then is in recovery mode. So we need that to happen. We need this to spike up. We need the stock market then to break down, and then we need to see silver outperforming gold. So when we come back down, or start to, either when we hit the resistance line here, or when we start to break down from a clear topping pattern, then that will be a good sign to start accumulating silver rather than gold. At the moment, it's quite probable that gold is going to do better than silver because it will hold its value better as they correct. So there's no great advantage yet in being in silver rather than gold. But as soon as we come anywhere near this orange zone on the chart here, that's where you want to be really, stacking the silver, because that's an indication that we're going to be breaking down and coming all the way down here somewhere. I don't know exactly how low, but silver would outperform gold for a protracted period. So that's the way to use a technical chart. It tells you very clearly when a chart is breaking out or breaking down. It tells you when to go long gold or when to go long silver. I understand that people have been saying, "Oh, the ratio's high. Now's the time to go." Because it's high, it doesn't mean it can't go higher. And all the while, you would have made more money if you'd been holding gold. So that's not an argument. We don't know how high it's going to go. It could go to 120. It could go on to 150. We just don't know the answer to that. So be patient and wait for the blooming chart to break down before you start swapping all your lovely gold for silver, because there's plenty of time. There's no rush. When this happens, when silver starts to outperform, it'll do it for a year or two. So you've got plenty of time to spot that and make your gains.
I think it's awesome advice. And, for you guys watching too, look for the deals out there. You're all on different budgets. Some of you have the ability to buy gold. And if you can buy the 1 ounce, if you're buying physical, you're going to get a much better bang for your buck than if you're buying a 1/10 ounce. And it's important to look at the math on everything too. You may be able to find, some good silver buys that are out there too. So, what we're talking about right now is loading up on one or the other in order to take advantage of the gains that you're going to get. So for those of you that are stacking long-term, these are the trends to be looking for. These are the waves to ride. It doesn't mean that you need to hurry and move out of silver and just go into gold. It doesn't mean you're just going to move all of your gold into silver. I like both metals. I have them for different reasons. But I look at the charts like what Kevin has here and services that he provides to give you a little better understanding of, maybe where do you want to go heavier, or do you want to move from buying one to buying the other? And then there'll be these rotations where you have an opportunity to move from one asset class to the next. And if that's too much for you, then just hold what you have. Fiat is going to continue to go down. Having sound money, having precious metals, having other assets are going to eventually continue to outpace what the dollar is doing, because we just keep printing dollars like crazy. So Kevin, if someone wants to follow you on X, they can follow you at Northstar Charts. If they want to sign up for your service, they can go to northstarbadcharts.com. And is your service a newsletter? Is it how does your service work?
It's a website, and if anybody wants to take a look at our website, just you can find me on X, as he just said there. Drop me a DM, mention Stacking Surfer, and we can sort you out a little bit of a discount there, or quite a big discount actually. Awesome. So it's a website that is aims to be completely unbiased in its technical analysis, and we cover all markets. We cover precious metals, we cover uranium, we cover platinum, palladium, all the base metals, the soft commodities, we cover stock markets, currencies. We cover it all. The charts are analysed in a variety of ways. As you saw them there, we do posts with the charts with full explanations. We also have podcasts that we do on a regular basis, and our members are free to ask us questions as well. And we have live sessions where our members can join us. So it's a community website, and if you do join and you don't like it, just cancel and we'll give you your money back. So nothing ventured, nothing gained.
Perfect. Well, Kevin, thank you for coming. I want to thank everybody else for coming as well. And education, educate yourself on all these things, people. It's going to help you a lot. It's going to help you better understand and make more informed decisions. And I think that's key. That's why the channel exists. So Kevin, thank you very much. And for all of you watching, thank you for coming. And if you haven't hit the subscribe and bell icon yet, please do that. And then also hit a thumbs up and take a look at these next videos that come up here. I think these are going to help you as well. And until next time, peace out.